All right, now here we go. How many times have I, and numerous people like me, YouTube videos like I do, have we said, if you don't hold the physical silver or gold in your possession, you don't own it? Well, who wants to lug all that around? I'd rather have a paper contract. Really? You'd rather have a paper contract because it's easier to play with remotely, digitally, right? You could buy and sell it online. Well, that's interesting because some Chinese investors just got burned on their paper gold scam for $60 billion. 60 billion with a B dollars. Do you have any idea how many tons and tons and tons and tons and tons of real, gold that equates to? $60 billion. In this particular scam, it didn't amount to even 1 ounce. It was fake. It was a fraud. Having said that, where do you suppose the price of gold would really be if those investors actually bought real physical gold and had it delivered to their house? There would be a little supply and demand problem there, right? Right now with paper, you just turn the printer on, print a piece of paper out, start a company, start selling these contracts, and pretend that you're an investment company. So, reading Silver Doctors here. While this has not been widely reported in Western media, news broke out this week of massive illegal gold futures trading scam in China. Not only does it underscore the growing hunger for gold among the newly minted Chinese middle class, but also hits home to the rationale of why owning physical silver or gold, in this case gold, is of utter and the utmost importance. They had what did this guy comment here? Quote, "That is obviously a very significant amount. This is an enormous scam," said Adrian Day, president of Adrian Day Asset Management. Looking ahead, he noted that, quote, "It might make Chinese investors turn towards the physical rather than the esoteric contracts. I don't think it will make Chinese people not buy gold. It will just make them want to buy physical gold and keep it," he said. I couldn't agree more. You just got burned playing with paper. Assets, that's the only way to do it. You got to invest, and there's all these ways of investing. The whole world's economic system is designed for you to invest in pieces of paper that aren't even worth the paper they're printed on. But we can't tell everybody that. We have to make them think there's really something there. A piece of paper, contract, stock, whatever, bond, anything, can go to zero. A stock can go to zero. It can be wiped out. How can something like this, 20 of them in here, or even in this particular example, I'd like to show you a 1961 quarter which has 90% silver. 25 cents it says here. Looks like any quarter you've ever seen. Now, if you hold it sideways, you don't see that little dark band line that's halfway through the coins like you normally do. That is another sign that this is silver. And it's only 1964 and prior dimes and quarters. So, that, by the way, is worth several dollars. That quarter is worth several dollars today. Not only can it not go to zero, it's worth several dollars. So even if they try to play these games with the gold and silver and they smash it here and there and they smash it here and there, it can't go to zero ever. That alone tells you it's a real asset. That's one of the properties that an asset, in my opinion, must have to be an asset. If it can go to zero, that automatically wipes it out from the category of being called an asset. If it's worth nothing, you have nothing. Pretty cut and dry there, isn't it? So, China, and here's the thing. The company is called Loco London Gold. Loco, L-O-C-O, Loco London Gold. Now, isn't in the Spanish realm the word loco is like crazy? And I'm going to check this out. I haven't done this. I'm doing a Bill O'Reilly. I'm doing it live. I'll do it live right now. I just typed in Loco London Gold. Google. First thing that comes up, LBMA. The London Bullion Market Association. The big one. The largest one in the world. The one I've been talking about that would be sure strange if a terrorist attack happened at the London Olympics and somehow the gold got wiped out because it was stored at a facility near where this happened, or maybe right where it happened, whatever. Back on track here. First choice that comes up, let me click this link. Loco London. It's got a page for them on the LBMA. So this is a company that apparently must be registered with the LBMA as a legitimate trader of futures and whatever paper contracts for gold. I haven't read this yet. I'm going to read it right now. Loco London is a concept that is perhaps the most important aspect of the London bullion market, as it represents the basis for international trading and settlement in gold and silver. Most global over-the-counter gold and silver trading is cleared through the London bullion market clearing system, with deals between parties throughout the world settled and cleared in London. This concept has evolved over time. In the second half of the 19th century, London developed as the center through which gold from the mines of California, South Africa, and Australia was refined and then sold. Well, that's interesting. That sounds like physical gold being refined and sold, not through a piece of worthless contract that just busted these Chinese people to the tune of $60 billion. Interesting. With this business as a base, and supported by the increasing acceptance of the London Good Delivery List, London bullion dealing houses established global client relationships. These clients opened bullion accounts with individual London trading houses. It soon became evident that these Loco London accounts, while used to settle transactions between bullion dealer and client, could also be used to settle transactions with other parties by transfers of bullion in London. Today, all such third-party transfers on behalf of clients of the London market are effected through the London Bullion Clearing System. A credit balance on a Loco London account with an LBMA member represents a holding of gold or silver, it says that, gold or silver, in the same way that a credit balance in the relevant currency represents a holding of dollars on account with a New York bank or yen with a Tokyo bank. So actually, this Loco London doesn't appear to actually be a company, but it says it was involving Loco London Gold since 2008. So I want to see if this is reported from Kitco News too, by the way. Let me just browse through this real quick and see if it gives the actual which company, who screwed these Chinese people over. Okay, just give me some basic stuff here about the supply of gold and silver, or, gold and demand, that kind of thing. Chinese gold demand is on track to expand by 7% to 870 tons this year. On its current path, China will likely surpass India as the single largest market for gold in 2012. So-and-so said at the Marcus Grubb at the World Gold Council. Gold demand in China has grown consistently over the past several years, driven by the liberalization of the Chinese gold investment market. Blah, blah, blah. Let me continue because I want to know who screwed them. Does it name names? Or is that Loco London Gold, it's an avenue for them to do this, apparently. It's not the actual company. So which company, using the Loco London Gold system through the LBMA, of course, screwed the Chinese investors? And let me just look real quick before I get back into one more thing I want to say. I don't see that there. Doesn't say anything. It goes on to talk about the old tulip bubble from the 1600s, which was another scam. It does not say anything about who, what, when, etc. about this, other than what I just read you. So I want you. We're having problems with gold right now, right? You can see this, and I want to refer back to you, or refer back to some stuff that's been in the Webbot report, several reports for a good while, and that is tungsten or other metals, but it should be tungsten filled gold bars. And it's not going to be the bars for the most part. You may find some that, you know, the average person would buy, although I wouldn't see why they couldn't do it there too, because it's just as easy. But it's going to be the big ones, the 400 ounces, the big gold bars, the one that banks transfer back and forth, central banks, governments. When you hear China buying tons of gold, it's those massive 400 ounce bars. And they're going to find out one day, someone or which country, who knows what, decides, let's do a little internal audit, if you will, of our gold. We've got X amount we just pulled in off of the London exchange or whatever. Let's cut into it and just verify that it's legit. Shouldn't be a problem. And then they cut into it. Oh my God, what's that in the middle? Matter of fact, not only is something in the middle, there's barely any gold surrounding it. So the mass of this 400 ounce thing is 400 ounces, 300 and something ounces of, 380 ounces of tungsten, and then the other 40 ounces of gold on the outside, just to make it look like gold. I've only heard about three times about tungsten-filled bars, and one of the shipments was to Hong Kong about 2 years ago. Wasn't a huge shipment, but it did make the news, and never did I ever hear about it again. They never said who sent it, where they got it from, who they purchased it. Was it the LBMA? Was it the Federal Reserve? Nobody knew. Didn't say it either. So I remember that. Be interesting to see where that goes, and just keep in mind in the future, as this gold and silver problem becomes apparent to the world, that all the alleged gold and silver we have with these numbers and everything, a massive percentage of that is actually paper that never even existed. Just a paper that says this paper represents, X amount of ounces of gold or silver, redeemable, blah, 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 whenever you, pay for this contract, this futures contract or whatever, in full, and then you pay for it. You might get a delivery, but when enough people start doing that, they're going to be scrambling because they can't meet that, because they leverage these things 100 to 200 or something like that to 1. Could you imagine going to the grocery store, advertising all over the world, people going online, hey, you can buy your groceries online at the local Publix. Put your order in, we'll actually fill it, come pick it up. Really? Man, that's convenient. Get on my computer, everybody else gets on their computer. Nothing out of the average, just the same number of people shopping on any given day at that Publix, except we're doing the new online system, and we go on there and place our order and pay for it right then and there, of course. Go down to the Publix. We don't have any more groceries. What do you mean? 5 people out of the 100 that signed up online to come down here and buy some groceries, 5 of them came and cleaned us out. What, did they have a massive order? No, just average orders, tiny little, Well, then how the hell did you run out? 5 people cleaned out what you should have had in stock for 100. You said you had the 100 here in stock online. It said all these items, 10 cans in stock, 5 cans in stock, 3 things of this in stock. Well, we just didn't expect everybody to come today. But it says it was in stock. You took my money as if it was in stock. Yeah, but we just didn't expect that many people coming all at once. All at once? You said you had enough for 100 people. Only 5 showed up. Yeah, but and that's all you're gonna hear. Bullion Bank, Switzerland, anything. All these people who allocated gold accounts, allocated silver. You don't have crap. Chinese people, 60 billion? And it said it's going on since 2008. 60 billion. US dollars we're talking. Who? Which company did this? Which clearinghouse? Which brokerage? Who did it? Forbes. Doesn't say who did it. Just the London Loco Gold. But that doesn't say who they are. That's not an entity, apparently. Let me go back a little bit and see if I can find anything. Info.goldavenue.com is the second choice. Loco, let me read this and I'll end this. Loco, the place at which gold is physically held and to which a particular price applies. The prime example is Loco London Gold, which means not only that the gold is held in London, but also that the price quoted is for delivery there. Many banks and bullion dealers quote a Loco London price automatically, and many institutions keep part at least of their position Loco London. International bullion houses located in Hong Kong, that's funny that they mentioned that, make a parallel market in Loco London Gold to the Chinese Gold and Silver Exchange Society during trading hours there. The description does not apply exclusively to London. Gold may be quoted Loco Zurich, New York, Tokyo, and considerable effort has been made to start a distinct market in Loco Tokyo Gold or any other center. So the basic thing is the first sentence. What is Loco Gold? Loco London or Loco New York or Loco wherever. In this case, it stands for the location is London, basically. The place at which gold is physically held and to which a particular price applies. So how in the hell did $60 billion worth of this located gold in London screw Chinese investors? It can only happen through an exchange or some kind of clearinghouse, brokerage firm. It's the only way. And all of them have to be okayed and approved by the LBMA, London Bullion Market Association, which is massively larger than the United States COMEX. You think metal manipulations and stuff happen here at the COMEX? Sure, but it's just a tiny fraction of the bigger picture, which is the LBMA. That's the big dog, right? The COMEX is tiny. The COMEX claims it has around 30 million ounces of silver in it, standing for delivery at any time. Meanwhile, the LBMA claims it has like 110 or 105, something like that, million. So 30 million COMEX, 100 million LBMA. Gold at the COMEX and gold at the LBMA, I don't even know. But the silver, I do know those numbers. It's roughly 30, 32 million, something like that, and 104, 105 million at the LBMA. So, it's so interesting that this is out right now. Big scam happening right now. Matter of fact, let me read something else that just caught my eye as I was just kind of browsing down here for a second. From May 12th, 2010, title of this, info.gov.hong Kong, or HK, so info.gov.hk. Title, LCQ5, Trading of Loco London Gold. And I saw some keywords that makes me want to read this urgently. Again, posted in 2010. Following is a question by Dr. Han Pan Pei Choi and a reply by the Secretary for Financial Services and the Treasury, Professor K. C-Chan, in the Legislative Council today, May 12th, 2010. Question. I have recently received complaints from members of the public that some investment companies telephoned them to promote investment activities related to Loco London Gold, but the companies did not provide sufficient information, including detailed explanation of the contract terms, the risks involved, and the operation mode of trading, etc. Some investors who had signed the authorization lost all of their capital within a short period of time. So this isn't even the first time this has happened. 2010, I'm reading you. There have been comments that such investment activities involve unscrupulous sales practices but lack regulation. In this connection, will the government inform this council of A, of the respective numbers of fraud cases received by the police in relation to the trading of Loco London Gold, and the respective numbers of persons prosecuted in connection with such cases in each of the past 5 years, and B, whether it knows why the Security and Futures Commission does not regulate the investment activities related to Loco London Gold and the professional qualifications of traders, whether SFC, which is that Securities and Futures Commission, will regulate such investment activities and draw up relevant statutory regulations and model sales documents, as well as set up a trader licensing system and draw up a relevant code of conduct. So actually, maybe some of what I said may not be relevant. It may be that Chinese investment companies duped their own Chinese investors into the loco London gold without them ever even knowing, the LBMA or whatever even knowing, and it was a scam that was right out of Hong Kong and screwed the Hong Kong people. In other words, some banking institution, some financial institution raped and pillaged, which is hard to believe, isn't it? I mean, that any of them would do that, to the tune of 60 billion. So it may not be anybody registered with the LBMA. It may not be one of the club. It may just been someone else in Hong Kong, some other banking institution, whatever, that screwed those people. So that's, I think, reading this from 2010 is interesting. In the past 5 years, there were 2 cases that were categorized by the police as suspected London gold trading fraud. The investigation of the case in 2009 involved 19 informants and 4 persons have been arrested. The investigation of another case in 2010 involves 1 informant. The cases are still under investigation. Currently, the public, and again, this is regarding Hong Kong talking to their own within their own government. Currently, the public can invest in gold and gold-related products through many channels. Among these, gold ETFs. No. Exchange traded funds and gold futures traded on the stock exchange of Hong Kong. Paper gold schemes and funds investing in gold derivatives and gold mining companies need to be approved by the Securities and Futures Commission. As for companies providing gold trading services in general in Hong Kong, they are not required to register or obtain a license from the SFC. These over-the-counter gold trading activities are a matter of direct negotiation and trading on the part of the buying and selling parties. London is currently the largest over-the-counter gold trading center in the world. London gold refers to a type of product which follows the standards of the London Bullion Market Association, LBMA, and is primarily traded by over-the-counter means. The buying and selling parties will negotiate directly and make trades using the gold fixing prices in the market, London market. The gold fixing prices in the London market are determined by the 5 members of the LBMA, with prices fixed twice daily at 6:30 p.m. and 11 p.m. Hong Kong time. The major participants in the London gold market include banks and large international precious metals companies, with trades conducted at the wholesale level. And this LIBOR scandal sets the rates of that stuff too, by the way. So, at least from what I'm pretty sure I know. One final thing. In fact, past complaint cases related to London gold are primarily concerned with improper trading practices and suspected fraudulent and deceptive acts operating under the name of London gold trading, but are actually unrelated to the current system of the genuine loco London gold market. In most cases in recent years, the complainants were persuaded to sign a customer contract authorizing the companies concerned to trade gold on their behalf. The companies concerned would use improper means such as falsely reporting market prices and deliberately increasing the number of trades to boost the amount of commissions earned. This sounds like any book I could read you right now out of American financial system. How the CEOs did it, whether it was housing rig, LIBOR rates rigging, municipal bond rates rigging, everything rigging. What? There's that word. Commissions. Up your commissions earned. Cook the books. Lie. Say anything you have to do to get that sucker's money. And then lose it. Or keep it. Steal it. So, ultimately, this appears to be an inside thing that happened in Hong Kong, claiming to be the loco London gold. It wasn't. Had nothing to do with that. And some people got majorly screwed. $60 billion. That means if it was a legitimate company, there would be a true $60 billion supply and demand handshake going on that would have had to have happened. So, again, say it once, say it 1,000 times. If you don't hold the physical gold and silver in your hands, in your possession, not even at a bank, in your house, somewhere safe, you don't own it, and you can and will be screwed. That's it. That's all I got.